panel, the next one is, how can we in the finance industry help this process, this move to net zero, and in particular on green bonds, can they make a real difference? And I'm going to ask Suzanne to lead the panelists up here. I'll leave Suzanne to introduce the panelists, but I'd just like to spend a couple of seconds introducing Suzanne, if I may. And Suzanne Buchta is Managing Director at BAML. I've been at the bank for a considerable time, but she's really been a pioneer in the green bond space. She was one of two who co-authored a white paper back in 2013, which were really the framework to create the green bond principles. And then those green bond principles, as you may well know, were authored by 4 banks and have now been broadened out and have over around 200 signatories to the green bond principles, and they're the leading process guidelines in the green bond market. So she's an acclaimed expert on this market, has been in the market since its very inception. She's got a number of accolades, but there's one that I particularly want to mention, which came from Bloomberg in 2014, and that was for her work entitled Catapulting Green Bonds from a Niche Market to a Mainstream Market. And I think that's exactly where we are now. It is a niche market. We need to move it forward into the mainstream, and I'm hoping that you're going to be able to discuss that on this panel. Over to you, Suzanne. Thank you.
Thank you very much, Martin, and thank you as well to Nicholas Pfaff for having us here on this panel today. Now, I'd like to comment on this niche market. I think we decided yesterday we'd moved to a cottage industry, which I consider to be bigger than niche, but not yet mainstream. And I will take a few minutes to talk about the green bond market and what is a green bond for those of you that are not familiar. But first, I'd like each of the panelists to introduce themselves. Bernardo, I'll start with you.
Thank you. Yes. My name is Bernardo Alfaro. I'm a Deputy General Manager at Banco Nacional de Costa Rica, which is a state-owned bank, the largest commercial bank in the Central American region. I oversee the credit and risk divisions at the bank. It's a privilege to be here.
Thank you.
Okay, good morning. I'm Bertrand de Mazières. I'm Director General Finance of the European Investment Bank, the bank that is the common property of the 28 member states and provide finance to capital expenditures, mostly in Europe. Actually, I'm afraid that the bank is partly the cause for some annoyance in the daily life of Dubliners now, because we're financing the construction of the connection between the green and red lines of the tramway system, but I hope it's for the best in the future.
Philippe.
Good morning. My name is Philippe Zaouati. I'm the CEO of Mirova. Mirova is an asset management company based in Paris, a subsidiary of the Natixis group. And we are fully dedicated to responsible investments. We manage about 6 billion euros across asset classes in listed equities, fixed income, especially in green bonds, and also infrastructure funds, and especially in renewable energy.
Manuel.
Good morning, everyone. My name is Manuel Lewin. I am the Head of Responsible Investment for the Zurich Insurance Group. That means I get to work together very closely with our Head of Irresponsible Investment. I'm just kidding, of course. There's really 3 things that I'm responsible for. I oversee the integration of environmental, social, and governance issues into our investment process for a portfolio of about $200 billion of what is essentially premium dollars that we manage at Zurich Insurance. Secondly, I look after dedicated allocations to so-called impact investments, including green bonds. And last but not least, Suzanne has mentioned we need this to become mainstream practices, and so it's part also of my responsibility to work together with organizations such as ICMA to support initiatives such as the green bond principles to really help advance responsible investment.
So now you see why I did that, because first of all, I cannot say Bertrand's name as nicely as Bertrand does. I wind up saying it with a terrible American accent. And secondly, now you're not trying to figure out which of these guys looks like a Bertrand and which looks like a Philippe. So now that you have the intros from our esteemed panelists, let's just take a minute to talk about the green bond market and what a green bond is. The very first green bond was done by European Investment Bank in 2007, so we're very happy to have them on our panel here today. Then 6 years later, in 2013, we had only had 13 billion in total green bonds outstanding, so still a very niche market. But a few important developments were, number one, the introduction of benchmark-sized transactions instead of the smaller private placements that had been done up till that point. And number two, entrance from outside the supranational sphere, so broadening out the credit of the market. In 2014, in 1 year, we saw 3 times the volume that had been done outstanding up until that point. And now in 2016, we have 100 billion outstanding and growing. In fact, we're up 40% over last year's volumes. So the market is taking off and people are standing up to pay attention. So what is a green bond? Well, we would broadly define it here at the Green Bond Principles ICMA Committee as a bond whose proceeds are going to finance green activities. And some of those green activities include things like renewable energy, energy efficiency, mass transportation, green buildings, reforestation, etc. So you can imagine if a pure green company issues a bond, or if a renewable infrastructure project issues a public bond, or if a pool of green assets like green solar loans issues a bond, those bonds are kind of green bonds naturally. But there aren't very many pure green companies that are yet issuing investment grade debt, or debt at all. So in order to scale up this market, we introduced the use of proceeds green bond back in 2007, which enables a company that may not be purely green to issue a green bond by promising to use those proceeds for green activities. It has the same credit quality as one of the regular bonds from that issuer and the same yield as a regular bond for that issuer, which makes it very accessible to the investor base. But obviously in doing that, you need to have a set of rules or at least guidelines for what does it mean to be a non-green issuer issuing a green bond. And that's what inspired us to write the Green Bond Principles, which leads me to my first question. So we know, Manuel, that back in 2015, ICMA fortunately took over the management of the Green Bond Principles. Could you talk a little bit about the structure that ICMA has put in place, the executive committee, the members, the consultation of any revisions to the Green Bond Principles, the working groups, and the revisions annually of the document?
Sure, absolutely. And I should probably start off by actually thanking ICMA for taking on this task. I think they have done a fantastic job helping us evolve the Green Bond Principles, and I'm very grateful for that. Maybe also for context, I should say that Zurich is currently co-chairing the Green Bond Principles initiative. But let's maybe start by talking a little bit about what the principles are in the first place and what they do. So the Green Bond Principles are a set of voluntary guidelines, and I guess they outline what the best practices should be in the green bond market. They do this in 4 key areas. Firstly, around the use of the proceeds that Suzanne's already highlighted, establishing transparency around the type of projects that issuers of green bonds are going to fund through that instrument. A second principle is really around the project selection, and this is all about making sure that issuers have a clear process by which they determine which types of projects are being eligible for funding through the green bond. Thirdly, there is a principle about the management of proceeds. How is the capital being tracked? Is there does the capital sit in a separate account? Is it being ring-fenced, etc.? And then last but not least, there's a principle around reporting, again, establishing transparency about what types of projects the capital has flown to once the proceeds are dispersed, but also about reporting on some of the environmental benefits that these underlying projects are having. And then in addition to all of that, the principles also talk a little bit about, and make some recommendations about assurance or the use of external reviews around that process. So to be very clear, the role of the Green Bond Principles is not to define what is green what is not green, what's in, what's out. But the role of the green bond principles is to establish the process and the transparency that then allows the investor to really make the assessment, do their due diligence, and decide for themselves whether it fits their criteria of green. And now, of course, it's still a young market, even if it's not niche anymore. It's still a young market. It's an evolving market, and so those principles get revised currently on a annual basis. There is a executive committee that consists of investors, of intermediaries, the banks, and of issuers that oversees that process. But we really rely on all of the members of the green bond principles. There's now just over 110 members, plus almost 70 observers to the green bond principles, and they get consulted as part of the process. There's also a number of working groups that support the executive committee in that process of the revision, and so that's very much what we're in the midst of doing. Hopefully, the version 2 second revision of the green bond principles will be accepted at the upcoming AGM of the green bond principles, which will be held in just a few weeks.
Thank you very much. So you can see that the Green Bond Principles is now a collaborative, open architecture process that really pulls in views from all of the key players in the marketplace. So now let's move on to the green bonds themselves. Bertrand, EIB issued the very first green bond in 2007. Can you talk a little bit about what inspired EIB to build the market in that way, what the proceeds are financing, and what EIB has been doing since then to grow the market?
Okay, with pleasure. First, why did we have this idea, together with some banks, and including one you represent? Why did we have this idea of issuing green bonds in 2007? It's relatively simple. There are two reasons. One is a bit of a political nature, and it's the political context, so to speak. 2007 was the first year when the European Union put together a consistent energy and climate policy. Since then, the EU has continued, by the way, but it was in 2007 that the first overall encompassing policy with objectives of renewable energy generation and energy efficiency and greenhouse gas emission reduction was set up by the EU. And consistently with this, in 2007, the EIB also set up its first version of its climate action strategy. This strategy has also evolved over time. On the EU side, the evolution has been the commitment that the EU pronounced within the context of the COP21. I remember that these commitments are quite ambitious, since the EU, for example, has set up as an objective to reduce the greenhouse gas emission by 20% in 2020 and more than 40% in 2030, and these are deemed imperative objectives for the member states. And to the same tune, the EU has set up as objectives to reach 20% of renewable energy in the energy mix of the EU by 2020 and more than 27% in 2030. At the same time, in the same year, so last year, in the run-up to the COP21 conference in Paris, the EIB published its current climate strategy. That was the result of an extensive exercise of public consultation, and it's actually available on the website of the EIB. But this strategy also commits EIB to allocate at least 25% of its lending to climate action projects every year. And it also commits EIB to two broad objectives. One is to finance projects that contribute to the objective of keeping global warming well below 2 degrees, as as convened by the COP21 conference. The other objective is a bit more tricky, but as important to us, to our eyes, which is to commit that projects financed by the EIB are climate change resilient or resistant, meaning that they will be able to function and to face the inevitable climate change that are already in, because whatever we say, indeed there is global warming that will happen. The issue is to keep it below 2 degrees, but there will be global warming. So this is the political context. Again, first EU strategy 2007, first EIB strategy as well in climate action at the same date, and so we thought it was a good opportunity to so to speak, to bring this contribution to the financial markets and to make the financial markets also contribute to these EU objectives. Beyond that, there's a belief, and the belief has been validated, I think, especially by the setup of the green bond principle. There was the behavioral, so to speak, belief on our part that green bonds could be very good instruments for starting a positive circle, a virtuous circle, so to speak. Because, again, at the heart of the green bonds, at the beginning, we established this idea of allocation of the proceeds to specific projects that have an impact on climate. And we decided that we would allocate the proceeds to projects of renewable energy generation or energy efficiency projects, on only these two categories. But if you set this allocation, you have to report about it. You have to make sure that the allocation does take place financially speaking, but also that this allocation is efficient as to the result. So you have not only to report on the reality of the fund allocation, but also to report on the results. So you have to generate transparency, you have to generate information. This in turn invites investors themselves to be attentive at what they do, what they invest in. Do they get the report? Do they report themselves? So we consider that this was a fantastic tool to increase, I would say, the global awareness of the entire financial ecosystem to the ecology. And that's the reason why, by the way, we decided to call the Green Bonds Climate Awareness Bond, which is a bit of a mouthful. I must say it's not very beautiful, but at least it conveys a message that it was a tool for global awareness. Today, we continue to do exactly the same, meaning that we allocate green bond proceeds to energy efficiency projects, renewable energy projects. We allocate the proceeds on a portfolio basis, meaning that we get the proceeds, they come in when we issue, and then it's disbursed on a first in, first out basis, so to speak, to the disbursements that are needed on our portfolio of energy efficiency and renewable energy projects. And we disburse only on new disbursements of the projects, meaning that we decided not to refinance past disbursements on the same projects, to be sure that we do contribute with the green bonds. We still are, at the moment, the largest issuer of green bonds worldwide. We've issued up to last year 14.2 billion euros, and since the beginning of this year already almost 3 billion euros equivalent. And it's euros equivalent because we've issued in 11 currencies already.
Thank you very much. So we have the very first issuer of a green bond here with us today, but one of the exciting things about the growth of the market that we are seeing in 2016 is more and more emerging markets coming with green bonds. So I'm very happy to have with us here, all the way from Costa Rica, Bernardo from Banco Nacional de Costa Rica, one of the most recent entrants to the green bond space. Bernardo, could you talk a little bit about what made BNCR decide to go forward with a green bond and what kinds of projects you are financing with the proceeds from that bond?
Yes, of course. Well, you see, our first international market issuance took place about 2.5 years ago. It was a plain corporate bond for a total amount of $1 billion. And it went quite well according to our expectations. Since then, those bonds have remained with the tightest spread to its sovereign, the Costa Rica sovereign, for an emerging markets quasi-sovereign issuer, which is, of course, our case. So 2 years later, at the end of 2015, we decided it was time to go again to market, not just to keep our presence in this international market, but also because we wanted to level our cash flow for the next 2 years. You know, our supervisor has implemented the liquidity coverage ratio as recommended by the Basel III Accord. That has put a lot of pressure on the liquidity indicators of all banks within the country. So we invited several investment banks to present their proposals in order to accompany us in this new issuance. And then when the people from Bank of America came to visit and present their offer, they asked where the proceeds from that first issuance had gone. And then they found out that over 60% of those resources, that's more than $600 million, went to clean energy projects, to finance power generation projects from renewable sources. Specifically talking about 5 wind farms and 11 small hydroelectric power plants, a total of 16 projects, each one of them with a capacity ranging from 8 to 50 megawatts. So the people from Bank of America recommended we should analyze the possibility of issuing green bonds. That was the first time we heard about green bonds. So we started to analyze the green bonds principles. And at the end, it came as the ideal instrument in order not just to support our cash flow, but also to match all the green financing we had been practicing and, of course, fulfill our financial goals. You know, at this moment, the Banco Nacional's current loans portfolio in clean energy adds more than 450 megawatts to the Costa Rican grid. That's 16% of the total capacity of the country. Enough clean energy supplied to power 720,000 households, and we are 4 million people in Costa Rica. So that gives a sense of what I'm talking about. So those are the reasons why we decided to issue green bonds this time. Now, the second part of your question, what are we doing in order to further the market? Well, we will continue supporting this sort of green projects. As a matter of fact, we have already some projects in our pipeline, including a water waste treatment project that's going to be very important for Costa Rica. And we have already, we had discussions with Moody's already, the rating agency, so they can provide us with some sort of a seal of approval of the green projects. That would be like a second or a third party opinion on the viability of the projects, which we think will allow us to better accomplish the green bonds principles.
And how was the transaction received within Costa Rica at large? I believe Costa Rica now gets about 99% of the energy of the country from renewables. Was there positive reception to the transaction?
Yes, of course. We went to the media and made a full disclosure about this event, and it was very warmly taken. Yes, very well received by everybody. Yeah.
Thank you, thank you. And of course, the green bond market would not be the green bond market if we didn't have investors that cared about investing in green, to enable us to showcase the existence of those investors to the issuers and encourage the issuers to go through these extra steps for financing in a market where it's very easy to issue debt. So Philippe, could you talk a little bit about what made Mirova decide to set up a green bond fund and a green investing style in general? And maybe also talk a little bit about, in addition to use of proceeds green bonds, what other types of green investments is Mirova looking at?
Okay. I mean, actually, we were really early investors in green bonds. I mean, I remember, I mean, at the very beginning, I mean, when some of your colleagues from Crédit Agricole came to us and asked us, I mean, if EIB would launch a bond targeted to renewable energy and energy efficiency, will it be interesting for you? And we said yes, because we had been managing socially responsible funds for a very long time. And one of the issues we were facing with, and we are, I mean, still facing with responsible investment, is that it's to a certain extent very difficult to measure impacts and to direct money, I mean, directly to the positive projects. And it was really, an easy solution to that, and an incredible, interestingly solution to really direct money to renewable energy and energy efficiency. So we started to invest, and we followed the market, but at the beginning it was, growing at very slow pace. And then when we saw the growth of the market 3-4 years ago, I mean the starting of the market, and especially the first emissions from corporates, then we thought that it could be interesting maybe to start to build portfolios with different kind of bonds. And finally, we decided to launch 100% green bond fund, not environmental fund. I mean, fully invested in green bond funds, meaning funds following the green bond principles. Now, 1.5 years ago, so beginning of 2015. So I think now with the diversification of the market, with supranationals, with a lot of corporates, with now a lot of banks, and also a lot of cities, regions, and so on, issuing green bonds, we are able to build comprehensive and consistent portfolios with a risk-return pattern, which is very close to the global bond benchmark. And if you compare our fund return and risk pattern to the global market, it's very close. So now the question is for us, is this really a market for that? And then maybe institutional investors could answer. But what we see is that so now our strategy is about 200 million euros, but we also invest in green bond in our other funds, traditional funds, and now it's represented approximately 50% of the other funds. So we have nearly 1 billion euro invested in green bonds only at Mirova. We can see some interest, and interestingly enough, we are launching this beginning of June a retail fund for Canadian bank. So it will be distributed in the retail network. So it's very different from the traditional investors who were institutional investors mainly. Then there are only a few investors who have decided to to create a specific bucket from green bonds. Zurich clearly is one of them, but there are not a lot. And so we are waiting for especially big institutional investors to call for mandates, typically green bond mandates. We are very confident that there will be at least one in the French market this year. We will do that, so it's very, very good news as well. So then, if you look at the green bond market, so I said that now there is a good diversification in terms of issuers, in terms of geographies as well. Emerging markets, Latin America, but also India and China at the forefront of the issuer. There is maybe one missing piece in the puzzle, which is the government bonds. So there is not really a green government bonds. So you have maybe noticed the announcement made by François Hollande, the French president, 2 weeks ago, who said that France will be the first to issue we like to be the first at the beginning, and then we... but he said that France will be the first to issue a green government bond. In fact, it won't be really a government bond because there are some technical issues, some constitutional issues. You cannot issue a bond and then direct money, public money to a specific need. But France would probably use the financial arm like CDC to issue green bond more efficiently in the coming months. So it's good news as well. Excellent.
And I know that Mirova also invests directly in renewable infrastructure.
Yeah, so as I said, we try to use our responsible investment philosophy, meaning integrating with a very strong conviction, environmental and social impacts in our investment decision-making processes. And we do it across asset classes. So we invest in green bonds, of course, also in listed equities, and of course in the infrastructure space. And so in the infrastructure space, there are different things. Of course, renewable energy. We are just closing a very important renewable energy fund, and we invest in wind farms, solar farms in Europe. And some of the investments were done alongside with the EIB, especially in Sweden a few months ago. We also invest in core infrastructure, which are not renewable energy, but energy efficiency, transportation, and so on. And alongside with a lot of other investors, big pension funds like PGGM, ABP, Ontario Teachers, and CalPERS, and so on. We have launched an initiative about green infrastructure. How can we measure the environmental and social impact in the projects, in the infrastructure projects we invest? This initiative is called GRESB infrastructure, and it's also a way to integrate more efficiently ESG criteria into the infrastructure investment space.
Excellent, thank you. So Manuel, Zurich Insurance has also made a public statement to the tune of $2 billion equivalents worth of green bond investing. What inspired Zurich to do this, and what impact do you think it has on the marketplace and also on the environment that Zurich has made this public announcement?
Sure. Well, look, as a responsible investor, I think our ambition is to manage our portfolio in a way that not only allows us to generate a sustainable and attractive risk-adjusted return. That's, of course, what we're here to do. But at the same time also allows us to have a positive impact on the environment, a positive impact on society. Now, we can, of course, do this kind of in an indirect fashion by taking into account environmental and social governance risks. As you're kind of part more of the bottom-up process, the portfolio construction, security selection, etc. But we feel we can also do this much more directly, as Philippe has pointed out, in a way that allows us to get a much better handle and be much more direct in creating the impact and measuring what it actually is. So there are a number of areas where traditionally one can do that. Impact private equity, that's where that whole notion has originated, or in real estate, and that's areas where we're active. But from a balance sheet perspective, we're first and foremost a fixed income investor. 80% of our assets is in fixed income. And so green bonds allowed us to really allocate in an intentional fashion towards impactful assets in the sweet spot of our balance sheet. And so for us, in a way, the question from the very beginning was not why should we do that, it was why should we not do that, and we really couldn't come up with a good answer to the latter question. So for us, it made a lot of sense. Being in the market early was a sizable commitment. While the market was still, there was $10 billion of green bonds when we came out. So it was I think a way to create confidence and signal that there would be demand, that there would be institutional demand. To be honest, you're probably in a better position to judge what the impact of that has been on the market. So I'll leave it to you to comment on that. But equally importantly, of course, is the environmental impact. And so since a number of supranational institutions, including the EIB, have pioneered last year for the first time a common framework for impact reporting, we can now get a feel for what at least parts of the green bond portfolio do for the environment. And so the roughly $400 million that we've invested in green bonds by supranational institutions, we estimate that this helps avoid about 500,000 tons of CO2 emissions per year. that's the equivalent of 1.2 billion miles driven in an average passenger car, or 50,000 around-the-world trips. And I think that's something we can be proud of.
Yes, very proud of it. And it definitely has made our lives easier at banks talking to companies when we can say, you know, Mirova has a green bond fund. Zurich Insurance has made $2 billion in green bond commitments, and there are others that are now following suit. I'm just noticing the time. We have only about 5 minutes left. I do have more questions for the panelists, but maybe we'll just turn to the audience for a minute to see if we have questions from the audience first. Yes, way at the back. Yeah, go ahead with your hand up. Is there a microphone? Go ahead, yes.
Hello?
Yes.
Oh. Manuel, you talked about the now beginning to quantify the impact of your portfolio. Do you see this trend continuing, and would it make more of a difference if people were more explicit about the CO2 impact as opposed to just calling things green? And do you think that ICMA could start to help to standardize that sort of process as well?
Yes, thank you for the question. You know, I think it does make a difference. I think people do relate to stories, and being able to talk about the impact helps, you know, relay a story. Whether the objective is to create awareness, whether the objective is to you know, communicate back to pension plan members or insurance policy holders, you know, where their money is going. Being able to talk about impact, I think, is meaningful. I think there is a trend, and you know, this is now happening in green bonds, but there are various efforts in the industry to do this in other asset classes. It's very hard to do. It's very hard to do, but you got to start somewhere. You know, with respect to what ICMA can do. I mean, you know, one of the principles of, as part of the green bond principles, is around reporting, and there are recommendations in there around impact reporting. The work that EIB and others have done to standardize their impact reporting has been driven by the green bond markets. I think a lot is already being done. I think this can serve as a template, certainly for other parts of the bond market. You know, I can maybe also say that one of the working groups that the Green Bond Principles has established is trying to find ways in which this use of proceed bond principle can be applied maybe to other types of projects, not just green and environmental, also social. And so that will bring the notion of impact measurement to different part as well. So yes, I think there's certainly a trend in place. I think more generally just around transparency. I think that's not just true for investment, but for everything in, you know, the days of Twitter and millennials and the ease of access for information.
Yes, at the back.
Hello. I have two questions, one to the general panel and another to Mr. Bertrand. To the general panel, at the beginning you mentioned that the green bond market has been slowly increasing. I was wondering if you could share what are the actions that the different stakeholders can take to enlarge the market? What would be the specific actions for instance, the banks or the investor companies or MDBs to increase the interest in the green bonds? And second, to the Mr. Bertrand, yesterday one of the panels mentioned the increasing need for infrastructure investments and the gap in infrastructure investments, and also the European Strategic Infrastructure Fund was mentioned. I was wondering if the EIB has considered issuing green bonds specifically to channel funds in infrastructure through the Strategic Infrastructure Fund. Thank you.
Bertrand, do you want to start with that, and then we'll go to the general question?
Yes, with pleasure. The infrastructure, the investment plan for Europe, or European the EFSI, is part of global EIB activity. It's not separate in the balance sheet, so we don't implement a separate funding. And let's say that you have two things. In the overall balance sheet of the EIB, you have the investment plan for Europe, these infrastructure investments that are supported by a guarantee of the budget of the Union. And you have this over obligation that at least 25% of EIB financed projects are climate, let's say, have a positive climate impact. And the two go together, meaning that part of the investment plan for Europe projects will be projects that also meet the objectives in terms of climate, but not all of them. And part of the green bonds we issue may finance these projects, but there will be no specific green bond for the FSI. I think that would be a bit too much detailed. And as to the enlargement of the investors' base, I just wanted to start with something that the panel on the asset management this morning said that let's say, climate awareness was rather a European feature. This remains true. When you look at placement, the primary operation placement of EIB green bonds, year after year, it's the share of European investors is between 80 or 90%. But we are seeing very interesting developments in Americas. In Americas, apparently there are a lot of retail investors and high net worth people, very rich people. I don't know about the two candidates for the presidential elections, but there are rich people who are willing to invest in climate action. And the World Bank, for example, did very successful retail operations of green bonds in the American, and we could also issue large sizes in dollar. There's a fantastic development in Asia. According to HSBC, half of the green bond issuance that's been done since the beginning of the year has been issued by Asian issuers and placed mostly in Asia. We see even central banks investing in green bonds, and some central banks explain to us that actually they see that as a natural hedge of one of the major challenges to their economies. Some relatively weak countries in the face of climate change invest in green bonds in the central bank's reserves. So there are very interesting developments at the moment.
And to the point of the previous keynote and getting temperatures below 2 degrees and eventually 1.5, we need to be taking carbon decisions into every decision we make. Bernardo, in Costa Rica, it feels that more than many countries, carbon is a factor in the decisions that the country makes in its policies and its investments. Can you speak a bit about why that's the case in Costa Rica and how other countries can follow suit?
Yes, we were in the wrong path about 30 years ago. You know, the land-extensive agricultural and cattle raising practices or activities did put in danger a large part of our biodiversity and of our rainforest and everything. So we took several steps in order to change that path. We created a National Parks Act that set limits to deforestation and protected important regions with with natural resources. We enacted the environmental law and created SETENA, which is our environmental protection agency. It's quite similar to the EPA of the United States. It's a very technical, rigorous agency that performs comprehensive and profound assessments of every project that's to be developed in the country. And then we approved also a climate change law and created a climate change office, whose main purpose is for the country to become carbon zero by year 2021. All of this has provided great results. Nowadays, over 25% of our country is designated preservation areas. We have reforested 1/3 of our territory, and Costa Rica harbors 5% of the world's biodiversity. You know, 65% of the greenhouse gases emission is caused by energy production. And as you mentioned before, in Costa Rica, 99% of our energy is from renewable sources. That's why we rank it third at the World Energy Council last year. We ranked 3rd in Latin America and 20th globally at their energy index. It's a very interesting index they use, which has 3 key factors: environmental sustainability, which measures your supply of energy from low carbon sources. It has energy security that measures your ability to meet current and future demand on energy and the reliability of your infrastructure, and energy equity that measures affordability and accessibility to energy across the population. So we do think we are in the right path now in order to achieve a sustainable development and carbon zero in the coming years.
Thank you. So we're out of time, but Philippe, to answer this question of, as one of the early entrants into this marketplace, what can each market participant do to encourage the growth of the green bond market and climate investment in general? Do you have any final suggestions?
I think we have all the pieces of the puzzle. I mean, of course, the role of investors is key. We need also to convince new issuers, and especially corporates. If you look at the trends since the beginning of the year, the trend is very good for banks, for cities and so on. Not so good for corporates. It's just tapping a little bit. So we need to have a lot of new corporates coming in the market. But I would say more globally, the question is not only how to develop the green bond market, is how to align finance in general with the objective of 2 degrees and with the objective of a low carbon world. So it's about decarbonizing all our portfolios. So if you take the objectives globally, then the most important thing is understanding the situation, building some reporting tools in order really to understand what does it mean, the carbon footprint of portfolio, and then measure the impact of what we do. And then green bond will become a wonderful tool in order to reach, to achieve this objective, and the market will continue to grow.
Excellent point. And with that, the red light is flashing saying, I need coffee, so we will go ahead and conclude here. Thank you very much for your time and attention, and thank you to all of our panelists for joining us today.